Hi, I hope everyone's doing good today, and I'm going to talk about the Tax Information Bulletin, the first one for 2021, but I'm only going to focus on the taxing of crypto. There is so much in the Tax Information Bulletin, and I just don't have time to go over everything in one video. This is not professional advice. If you want information directly from the horse's mouth, you can go to the IRD website. They have a section on crypto assets. You could also call them. So you can just give them a call and say, I have a friend that needs some advice. So the interesting thing that happened, okay, let's get into it. The interesting thing that happened was the binding ruling was withdrawn for salary and wages paid in crypto and bonuses paid in crypto, and they had to replace it. The reason they had to replace it was because it was inconsistent with the employment law, relevantly the Wages Protection Act and the Minimum Wage Act. So they had to go through, and in the Tax Information Bulletin they have gone into detail about what is crypto. They define it in detail, and they go into salary and wages, what is salary and wages, the definition, the case law, the parts of the act, relevant parts of the act. It's extremely detailed, and there's so much in it. I could go on for hours, but firstly what I'll do is I'll talk about their definitions, but I'm trying to keep it in some sort of logical order because it's so easy to jump around, but I'll talk about the definitions, and the reason they need to be so precise about their definitions is because they're wanting to tax it. So their definition of crypto assets. Crypto asset, digital assets that use cryptography and blockchain technology to regulate their generation and verify transfers. Other terms include cryptocurrency and tokens. So they've defined crypto. They want to tax people who are making money being paid in crypto. And they're having some difficulty there because crypto is so diverse. So they say generally some crypto are, what does it say here? Medium of exchange, divisible, fungible, durable, and hard to counterfeit. Obviously not all crypto is like that, because you've got crypto kitties, they're not fungible, so there's all sorts of different crypto types. But some definitely do have the characteristics of money, but Inland Revenue is saying they're not money, they're property. So when you're taxed on your property, if you're in the business of buying and selling real estate, for example, that type of property, you get taxed on your profits. There's no capital gains tax in New Zealand per se, so you get taxed when you buy and sell property, well, on the sale and the profits that you made on the sale. So similar thing with crypto. If you want more detail, you need to go and have a look online. The reason they say that crypto is not money is because it is not issued by any government, they're not legal tender anywhere, not generally accepted as payment for goods and services, and they're extremely volatile to date. So there's issues around some crypto being the being able to be a store of value. The reason why why it's important, is it money, is it property, in terms of salary and wages and bonuses, is because the previous case law defined salary and wages are considered to be payments that are, in return for work undertaken, fixed, that is to say, of a predetermined amount or rate, not, for example, a share of profits. That's important if you're being paid crypto as shares. So if you're paid them as shares, it's not salary and wages. Regular, that is to say, recurring on a regular basis, usually weekly, fortnightly, or monthly, and in money. There are exceptions to money. People were given board for their, in return for work. So there have been exceptions in the past, and Inland Revenue talks about that and says, okay, if you're being paid crypto, it can be the same sort of exception. So if it's money like, then it's still considered salary and wages. And the crypto, because crypto is so diverse, there is some crypto that they've accepted, yes, that is money like. There is other crypto that they've said, no, that's not money like. Does that mean if it's not money like, you don't have to pay tax? No. This is all about whether you're paying PAYE, pay as you earn tax, or fringe benefit tax. That's the differentiation there for payments for salary and wages. And also the other thing that you need to look at is, are you complying with the minimum wage? You need to, when you're being paid in crypto, the employer needs to make sure that all the other obligations are taken out. So even if you're paid in crypto that is not money like, they still have to calculate what it would be in terms of money and work out your KiwiSaver and your student loan, your child support, all the other types of tax that gets taken out, or family tax credit that you're entitled to, or the, with child support that goes to the other person. So that all needs to be worked out and based on the gross amount that you're earning, and that includes things that are not money like. Well, that's my understanding of what I've read. If I'm wrong here, let me know. But that's the understanding that I've had. When I read here, they say so crypto like Bitcoin, Bitcoin Cash, Bitcoin Gold, Litecoin, their function is to be like a currency, used as a currency, and so they are sufficiently money-like to come into the ordinary meaning of salary and wages. Crypto that's pegged to fiat, so you've got Tether and Paxos Standard, they're sufficiently money-like to be considered salary and wages. But then on the other hand, you might have crypto that has a lockup period. So crypto assets that can't be converted or sold by the employee for a material period of time after payment does not sufficiently resemble a payment of salary or wages. Crypto that can't be converted directly into fiat, that's not sufficiently money-like to be considered salary or wages for tax purposes. And there's also crypto that acts as vouchers, shares, or debt security. These would not be considered money-like. So you've got utility tokens, rights to access, operate, use or control a platform or other property services, providing rights to underlying tradable assets such as precious metals or real estate, providing ownership or control of financial assets, often referred to as security tokens. Okay, so if it's not money-like, then it may be that you're sacrificing some of your salary for getting these crypto, in which case they say that the employer also needs to comply with the Minimum Wage Act and the Wage Protection Act. So that's something you need to look at if the crypto that you're getting paid in is not money-like. Here's their conclusion. It's unclear on the face of the legislation whether an employee who regularly receives crypto assets as part of their normal remuneration package is subject to PAYE or fringe benefit tax. Both views are arguable. Broadly, the scheme of the Act is that consideration in money is subject to PAYE, pay as you earn tax, whereas non-monetary benefits are subject to FBT, fringe benefit tax. Crypto assets are not money in the technical sense, although they share some characteristics of money. This might suggest that payments in crypto assets should be subject to fringe benefit tax. However, the distinction between monetary and non-monetary payments is not hard and fast. Statutory exceptions make some non-monetary benefits, such as employer-provided accommodation, subject to PAYE. Further, the PAYE rules are drafted widely enough to potentially include some other non-monetary payments. Ultimately, the issue turns on whether regular payments in crypto assets come within the ordinary meaning of salary or wages for tax purposes. The answer to this is not certain. While a regular payment received in crypto assets has many of the hallmarks of salary and wages, historically salary and wages have been payments in money. However, Section 6 of the Interpretation Act 1999 requires legislation to be interpreted as applying to modern circumstances. While not free from doubt, on balance, the Commissioner's view is that for tax purposes, the concept of salary and wages are wide enough to encompass some regular payments in crypto. Although employers will need to be aware of employment legislation, consequently, these payments are salary or wages under Section RD5 for Tax Purposes Act. Therefore, they are PAYE income payments under Section RD3, and the PAYE rules apply to them. Because the payments are subject to PAYE, the fringe benefit rules do not apply. So, if you've got a situation where it could be PAYE, could be FBT, then PAYE will apply and FBT doesn't. Okay, so how do you work out how much your crypto is, how much money your crypto is worth, how much New Zealand dollars? So generally, arrangements of this type will provide for an employee to be paid in an amount of crypto denominated in New Zealand dollars. So if it's in your contract that you're going to get $5,000 worth of crypto, then they don't need to convert the assets into New Zealand dollars to calculate the PAYE, because you've already said it's $5,000 worth of NZD. We'll work out what the tax is on that. However, where assets are paid in For example, if you get 0.001 Bitcoin per fortnight, it's necessary to calculate how much that is in New Zealand dollars and then work out the tax on that. Conversion rates may be obtained from a centralized data repository site that may be listed from time to time on Inland Revenue's website. So I went on Inland Revenue's website and looks like they use CoinMarketCap and Yahoo Finance currencies. Alternatively, conversion rates may be obtained from a public exchange that is comprehensive, know your customer anti-money laundering procedures in place. Which exchange or exchanges is appropriate will depend on the circumstances. Using a New Zealand-based exchange listed on the Financial Service Providers Register will be appropriate. If the appropriate valuation cannot be obtained from a New Zealand-based exchange, an overseas-based exchange can be used for some altcoins, crypto assets other than Bitcoin. It may be necessary to convert into US dollars or another fiat currency and then convert into New Zealand dollars. Rates can vary significantly between different exchanges and currencies, therefore taxpayers should use a consistent exchange and conversion approach, for example using a consistent time of day to determine the conversion rates. Okay, so I have a couple of couple of examples. So these are the examples from the Tax Information Bulletin. So we've got Ken. He's employed in Crypto Wonderland. He gets $5,000 per month in New Zealand dollars, and he gets another $5,000 worth of Bitcoin per month. So his salary is $10,000. The $10,000 gross PAYE should be calculated on the $10,000 gross payment and withheld and paid to the Commissioner in New Zealand dollars. The net amount is payable to Ken. If Ken is a KiwiSaver member or is subject to child support or student loan deductions, the Employer's Guide IR 335 and PAYE calculator, both available on the Inland Revenue website, can be used to assist calculating these. So, yeah. Okay, so now we have a example of someone being paid bonuses. So this is Anaru, and he's employed by Crypto Wonderland as well. He gets $150,000 salary a year. Anaru's contract provides for $10,000 gross bonus if Crypto Wonderland profit exceeds previous years. Anaru requests that this cash bonus be paid out in Bitcoin. Crypto Wonderland has an exceptional year. Anaru receives his bonus. The bonus is subject to PAYE, which is $3,330. That's paid to Inland Revenue in New Zealand dollars. As a result of Anaru's request, the net amount of $6,670 worth of Bitcoin is going to be transferred to Anaru's Bitcoin wallet from his cash bonus. So the $150,000 salary per year, he gets tax taken out of that regularly and goes straight to IRD. It's just the bonus that he gets in crypto. So that's the part where he works out and gets the crypto paid into his wallet. Okay, so I hope that hasn't been too crazy for you. Thank you for watching. I hope that's been helpful. It's actually taken me a long time to do this video because I keep doing it, redoing it. I don't know how these people do daily podcasts. I'm all over the place anyway, so thank you very much for listening to this. If you have any questions, if there's anything I've said that's wrong, I'm more than happy to hear about it. I'd love to know. My understanding is just how I've interpreted the tax information bulletins, and I'm happy to hear anyone else's interpretations. Have a great day. Thank you.